Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, September 9th, 2025, we're zeroing in on Intel Corporation, ticker Intel, amidst a whirlwind of corporate and governmental news that's actively shaping its stock trajectory. Intel is currently navigating a significant leadership reorganization, highlighted by the departure of longtime executive Michelle Johnston Holthouse, the chief executive of Intel Products and former co-CEO. Her exit, after over 3 decades with the company, has been noted as causing a slight slip in the stock price today, adding a layer of uncertainty. New key appointments include Kevork Kachisian to lead the data center and AI group, an executive from ARM Holdings, a move widely seen as strategic for Intel's future in these critical, high-growth areas of AI and cloud infrastructure. Furthermore, Srinivasan Iyengar is set to head a new central engineering group, establishing a custom silicon business, which market analysts are viewing as a positive development for aligning innovation and execution more tightly. CEO Lip-Bu Tan is also implementing clean and simple architectures, signifying a renewed focus on core product development and operational efficiency across Intel's diverse portfolio. Beyond internal restructuring, Intel has seen substantial government involvement, with the U.S. government announcing an $8.9 billion investment for a 9.9% stake in late August, aimed at bolstering the domestic semiconductor industry. This was coupled with an amended CHIPS Act agreement, securing an additional $5.7 billion in accelerated funding, with Intel's CFO stating this equity stake effectively removes prior handcuffs associated with the grant. However, this government deal isn't without controversy. While some analysts view it positively for capital, others criticize it as cronyism, and an 8K filing on August 25th revealed new, unforeseen risks and uncertainties that could impact various stakeholders. Wall Street analysts currently maintain a hold consensus rating on Intel, reflecting the mixed sentiment surrounding these diverse and impactful developments. The stock is trading in the middle of its 52-week range of $17.67 to $27.55, suggesting it lacks strong conviction in either direction at this moment. Looking at the daily chart from April 2024 to the present, we can immediately identify a period of significant long-term volatility and a general downward trend from its earlier highs. The stock experienced a sharp decline around early August 2024, plummeting from highs in the low $30s down towards the $20 mark over just a few trading sessions. This dramatic price action, characterized by large red candles and heavy volume, directly correlates with the period when the government investment was initially announced. Crucially, as the 8K filing later clarified, the promised cash infusion did nothing to boost Intel's stock price at that specific time, instead seeing a negative reaction from the market as it digested potential new complexities. The stock eventually found a crucial long-term support floor around the $18.50 to $19 level during that period, establishing a significant demand zone that has historically prevented further significant losses. Let's narrow our historical view to focus on a critical reversal point between February and March 2025, specifically on the daily chart, to identify key resistance zones. Here, we observe Intel surging impressively to a peak of $27.39 around February 18, 2025, effectively testing its then-current 52-week high of $27.55. This strong upward movement, fueled by optimism, was unfortunately short-lived, as the stock encountered significant selling pressure immediately after this peak. The area between $27 and $27.50 clearly functions as a robust resistance barrier, where previous bullish attempts have consistently been met with overwhelming supply and a rapid price rejection. Following the sharp peak, the stock tumbled aggressively, losing over 20% of its value within weeks, eventually finding temporary stabilization around the $23 to $23.50 range. This $23 to $23.50 zone has since demonstrated its importance as an intermediate support level, where buyers have stepped in to curb further declines on multiple occasions. Such persistent resistance at $27.50 suggests that for any sustained bullish trend to truly emerge, Intel must not only break above, but also convincingly hold this formidable level, a task that has proven difficult historically for the stock. Now, let's transition to the hourly chart to dissect the immediate, granular market reactions to the most recent pivotal news in August 2025. Pay close attention to the candles around August 20th and, more critically, August 25th, where the news flow directly impacted trading activity and investor sentiment. On August 20th, specifically around 1300 hours Universal Time Coordinated, Intel experienced a noticeable price erosion, moving steadily from above $25 down to the $23.60s over the trading hour. This pre-market weakness and early session selling set a distinctly bearish tone, preceding the major disclosure that would follow a few days later. The most striking feature on this hourly chart is the massive red candle on August 25th at 1300 hours Universal Time Coordinated, showing a sharp drop from approximately $25.20 to $24.90. This rapid and significant decline was accompanied by exceptionally high trading volume, dwarfing the volume of surrounding candles, highlighting intense selling pressure. This abrupt price fall is almost perfectly synchronized with Intel's 8K filing on the same day, which detailed new risk factors associated with the U.S. government's substantial equity investment. The market's visceral reaction here indicates that the perceived, previously undisclosed risks outweighed the immediate benefits of the government's financial backing, leading to an immediate and sharp sell-off. Such high-volume declines often signal a strong, conviction-based move by institutional players, suggesting a rapid shift in short-term market sentiment towards caution or negativity. In the days following this pivotal event, Intel struggled significantly to regain its previous highs, instead mostly consolidating within the $24.20 to $25 range through the end of August. This prolonged consolidation period suggests a market in a state of indecision and uncertainty as investors continue to evaluate the complex long-term implications of both the government's stake and Intel's ambitious restructuring efforts. Shifting to the 15-minute chart, let's examine the very short-term, granular price action from September 4th through the end of trading on September 8th, 2025. During this period, Intel has been trading in an even tighter, more confined range, primarily hovering between $24.30 and $24.60. The consistent, relatively low volume, without any sharp spikes or dramatic swings, suggests that market participants are currently lacking strong directional conviction and are perhaps awaiting fresh catalysts. This sustained sideways movement and reduced intraday volatility are typical indicators of a wait-and-see approach by short-term traders and algorithms. Today's news, September 9, 2025, about the executive departure causing a slight slip would be playing out in this very short-term window, potentially pushing the stock towards the lower end of this range or just below it as the new trading day unfolds. The narrow trading band and the absence of significant breakouts or breakdowns in this time frame clearly reinforce the current Wall Street hold rating, implying neither a strong buy nor a strong sell signal for the immediate term. For day traders or those focused on very short-term movements, immediate overhead resistance is evident around $24.70, a level that has repeatedly capped upward advances in recent sessions. Conversely, an important intraday support level has established itself near $24.20, where buying interest has historically emerged. A decisive break above or below these tightly contested levels, accompanied by a noticeable increase in volume, would be a strong signal for a potential shift in the short-term sentiment and open up new, more active trading opportunities. All right. Let's return to our comprehensive daily chart view to recap the crucial insights and project future possibilities for Intel, keeping both short and long-term perspectives in mind. In the short term, Intel faces a somewhat neutral to slightly bearish outlook, influenced by the recent executive departure and the market's cautious reaction to the government investment's inherent risks. The stock is currently trading around $24.50, which is near the midpoint of its 52-week range, indicating a state of equilibrium or indecision after previous sharp moves and lacking a clear catalyst for immediate breakouts. Looking at the long-term perspective, Intel's strategic leadership changes and the creation of a dedicated custom silicon business offer substantial potential for innovation, diversification, and market expansion in crucial areas like AI. The massive government funding also provides a critical capital cushion and a clear mandate to strengthen domestic semiconductor manufacturing, which could evolve into a powerful, sustained tailwind for the company. These initiatives could position Intel strongly against competitors in the coming years if executed effectively. However, the company's underlying financial health remains a significant concern, with reported negative profit margins of -38.64%, substantial net losses of -$20.5 billion, and negative free cash flow of -$8.32 billion over the trailing 12 months. These metrics point to deep-seated profitability challenges that require fundamental improvements, not just strategic shifts, to turn around. The highly competitive semiconductor industry, dominated by agile rivals like NVIDIA and AMD, means Intel must execute flawlessly on its new strategies to regain market share and, more importantly, restore investor confidence. For investors considering a bullish stance, the reasons revolve around successful implementation of new architectures, strong upcoming product launches, and a clear, sustained return to profitability driven by the new data center and custom silicon initiatives. If these fundamental improvements materialize, we could realistically see Intel push towards and potentially breach the $27.50 to $28 level in the medium to long term, indicating a robust recovery and a new uptrend. I'd place the likelihood of this happening over the next 6 to 12 months at approximately 40%, contingent on significant positive news and tangible financial turnaround. Conversely, the bearish case rests on continued unprofitability, failure to execute on strategic shifts despite the leadership changes, and an exacerbation of the risks outlined in the government deal. Should Intel fail to demonstrate tangible operational and financial improvements, our retest of the strong long-term support at $18.50 to $19 becomes increasingly probable, representing a key risk for current holders. I'd assess the likelihood of a dip below $23.50 as higher, perhaps 60% in the next 3 to 6 months, especially if the current slight decline accelerates or broader semiconductor market weakness emerges. Key price levels to monitor vigilantly are the immediate support at $23.50 to $24. A decisive break below this could signal further downside to the $22 or even a retest of the $19 levels. On the upside, overcoming the $25 psychological resistance is the immediate hurdle, followed by the formidable $27 to $27.50 supply zone, which represents both historical resistance and the 52-week high. Traders should always prioritize watching volume alongside price action for confirmation. Significant volume on a breakout above $25 or a breakdown below $23.50 would lend strong credibility to the respective moves. Beyond technicals, keep a close watch on Intel's upcoming quarterly earnings reports, any further disclosures or amendments regarding the government investments terms and conditions, and crucial product announcements from its new CPU, GPU, and custom silicon divisions. These fundamental catalysts will heavily influence whether Intel can reverse its recent underperformance and begin a new, sustainable growth phase for investors. That concludes our in-depth analysis of INTC's charts and news today on Explain the Charts. Always remember to conduct your own comprehensive research and consult with a qualified financial advisor before making any investment decisions.